Hello traders and welcome to another video review. Today is Friday, February 3rd, 2022, and today, as you know, is what? The non-farm payrolls day. So let's take a look at the Forex calendar anyway. Nevertheless, please notice the fact that this is going to be the key event of the day. Besides the non-farm payrolls data release, unemployment rate and ISM Non-Manufacturing PMI, with all of the other sub-indices, we still have other data scheduled for release. Very important data from the UK. Composite PMI and the services PMI are scheduled for release 10:30 from the UK. The market participants apparently expect this data to drop from 49.0 to 47.0 and 49.9 to 48.0 respectively. Non-farm payrolls, on the other hand, are expected to drop from 223,000 to 185,000, and unemployment rate is expected to grow or increase from 3.5% to 3.6%. ISM Non-Manufacturing PMI is expected to increase from 49.6 points to 50.4 points. So plenty of very important data expected to be released on time today. So please, you should expect increased volatility, volatility, and the price changes as well. Liquidity might dry up a little bit during the news release, so please be aware of this fact as well. It always seems to be a better idea to wait a little bit for the dust to settle in order to trade the NFP payrolls. Everybody else is trading NFP payrolls because this is the key event of the day, this is the key event of the week, this is the key event of the month for the day traders, for the scalpers, and for the other traders. So please, again, set yourself in a trader's framework, traders mindset, of course, and trade according to your plan. That's always seems to be like a good idea. But that's enough of talk from me. Let's take a look at the some charts. Let's take a look at the technical situation of the euro dollar, because this pair will be greatly affected by today's data, especially if non-farm payrolls will not deliver the numbers. So first pair is euro dollar. For our chart of the euro dollar, is showing us a nice reversal from the extremely oversold market conditions, and as you can see now, we got another bearish divergence here, growing more and more. As you can see, this is the best evidence that there is some sort of the bearish divergence. It might be a first clue for all of the traders that the market is ready positioning itself for another move to the downside. The local high was made at the level of 1.1033, which is a little bit above the 50% of the Fibonacci retracement of the big wave to the downside. We cross below the technical support, very important technical support, 1.0929, and now we are trading just below the 150 periods moving averages. It's just here. So definitely the market is positioning itself in a very, very tight range as traders await the NFP payrolls in order to surprise or not surprise the market participants. So please be careful trading this event. Stay focused, of course, as the volatility might be way higher than during the regular data release and the regular trading hours. So that's the situation here. We got the technical support located at 1.0802, and the other technical support, very important technical support, is located at 1.0782, and violation of this level would likely means that the lower levels are being exposed, and the local high located at the the high is 1.1033 will now become the swing high and the high of the overall corrective cycle. There you go, you can see it here, overall corrective cycle from the bottom that was made in the September last year. So that's the situation on the euro dollar. The other pair that will be greatly affected by the today's data is well, the S&P 500. Let's start with the S&P 500. What is going on here? We have a breakout. We have a breakout above the technical resistance made on the 13th of December, just before the Christmas. That's the one level, 4,117, and the other level here is, of course, this level at 4,150. We broke above all of these levels. Nevertheless, please take a look at this movement to the upside. It's clearly corrective. It's clearly corrective in nature. This is not the beginning of the new trade to the upside, new upside trend. Nevertheless, we can do the Fibonacci projections here, where we can expect some sort of the target for this movement to the upside. And as you can see, I got my targets located around here. So we already hit the target located, projected target, of course, located at 61% of the extension, which is somewhere around 4,161, 10 points above this high here. Okay, that's fine. And then the next target would be 1-to-1, basically extension on the S&P 500, 4,405. This is the next target for the bulls. So if there is a nice number from the S&P, from the NFP, then of course we can expect even this kind of a movement today. So let's label this scenario. This scenario is, of course, ABC. So we got the bottom for the of the wave. We got the wave A. We got potential bottom for the wave B. Now we wait for the wave C. So the situation here is, please focus for a little bit. The situation is either we hit 61% of the extension and we go down, or we will jump impulsively way higher towards wave 3, target 4,405. Okay, so that's the situation here on the S&P 500. Of course, the other market that will be greatly affected is the US dollar to the Japanese yen. Let's take a look at the US dollar to the Japanese yen. Well, for our chart is showing us that the downtrend is doing really great. As you can see here, we are trading below the 50 and 100 periods moving average. We are keep making lower, and right now the next target is, of course, the technical resistance is 131.13, and the next target for the bears is the lows located at the 16th of the January 2023, 127.25. Please be aware of the fact that this market is very susceptible for the NFPs. It can move as strongly as the euro dollar. So for now, I would again remind you guys to stay focused, to basically stay focused during this trading hour. This is the intraday technical resistance. The level is 129.4. That's the technical resistance for this market, and of course the dynamic resistance is located where the 50 and 100 days moving average is periods moving averages, 129.88, 129.99. So that's the 10 pip difference between 50 and 100 periods moving average. Nevertheless, during the negative, because of the negative sentiment and RSI penetrating the lower levels of the range, 39 points. Right now, the sentiment on the US dollar to the Japanese yen is negative, is skewed to the downside. So we should expect another leg to the downside to appear here. And if the intraday technical resistance at 129.02 is not violated, then the next target is here at the bottom of this movement to the downside, the low from the 16th of the January 2023, located at 127.23. So that's the outlook before the NFP payroll data release. Thank you very much for watching this analysis, and I hope I see you guys next week. So take care and bye bye.